Welcome to Explain the Charts, where we break down the market with a keen eye on both the news and the chart data. Today, September 16th, we're delving into Tesla stock, TSLA, a company at the forefront of electric vehicles and clean energy. Recent news suggests mixed sentiment surrounding Tesla, with analysts revising price targets based on demand trends and upcoming product launches. The Street reports that Guggenheim Partners raised their Tesla price target to $153 from $134, citing improved demand trends, but maintained a sell rating on the stock. Deutsche Bank analyst Ed Yu resumed coverage of Tesla with a buy rating and a price target of $295, viewing the company not as an automaker, but as a technology platform with a unique valuation framework. Yu acknowledges that near-term deliveries and margins have been weaker, but anticipates this to be temporary, with new models and refreshes on the horizon. These contrasting views from analysts highlight the uncertainties surrounding TSLA's future performance. The upcoming October 10th event unveiling Tesla's Robotaxi is a key catalyst that could significantly impact the stock price. Investors Business Daily suggests a potential buy entry for aggressive investors if Tesla stock moves above its 50-day moving average, using the August 20th high of 228.22 as a trigger. However, the Robotaxi deployment is anticipated to be a multi-year effort, potentially not launching until 2026 to 2027, which may temper investor enthusiasm. Tesla's stock is down 7.3% year-to-date and 15.1% from a year ago, closing at $230.29 on September 13th. This price action reflects the market's concerns regarding Tesla's near-term fundamentals and the uncertainties surrounding the Robotaxi launch. Let's dive into the charts to gain a deeper understanding of the technical landscape and identify potential trading opportunities. Looking at the daily chart for Tesla, we can observe a long-term upward trend, evident in the steady progression of higher highs and higher lows. However, recent price action has been more volatile, with the stock forming a series of lower highs, indicating potential bearish momentum. The stock has experienced a pullback from its July 2024 high of 273.93 and is currently testing the key support level around 230. This level represents the 50-day moving average, which has acted as both support and resistance in the past. A break below this support could trigger further downside, while a bounce off this level could signal a short-term recovery. If we zoom in on the recent price action, we can see a noticeable decline in TSLA's stock price since early September. This decline coincides with news of potential production delays for Tesla's new affordable model, expected to begin production in the first half of 2025. The market may be reacting negatively to this delay, as it could impact Tesla's growth trajectory in the medium term. However, it's important to note that the stock has rebounded from a late April low, indicating that investor sentiment remains generally positive. The upcoming Robotaxi reveal event in October could provide a catalyst for a potential rebound if the event is successful. Now, let's switch to the 1-hour chart to get a closer look at the short-term price action. The 1-hour chart reveals that Tesla has been consolidating in a narrow range for the past week. This consolidation suggests that the market is indecisive and struggling to establish a clear direction. The stock is currently trading near the upper end of this range, but we can observe a series of lower highs and lower lows, indicating a potential bearish bias. The recent decline in volume suggests a lack of conviction from both bulls and bears, further supporting the notion of market indecision. The 1-hour chart shows a clear resistance level around 230, which coincides with the 50-day moving average on the daily chart. This resistance level has been tested several times in the past week, and a break above this level could indicate a shift in momentum towards bullish sentiment. However, the lack of sustained volume suggests that any breakout could be short-lived, especially considering the recent bearish trends on the daily chart. Finally, let's take a look at the 15-minute chart to get an even more granular view of the price action. The 15-minute chart reveals a series of smaller candles, indicating high volatility in the short term. The stock has been trading in a narrow range for the past few hours, but the high frequency of price fluctuations suggests that there is a lot of buy and sell pressure. We can observe a clear resistance level around 230, which has been tested several times in the past few hours, with the stock repeatedly failing to break above this level. The lack of sustained momentum above this resistance level suggests that bears are currently in control, and any rally is likely to be short-lived. The 15-minute chart also shows a potential support level around 228, which could provide a short-term bounce for the stock if the current downtrend continues. However, the high volatility and the lack of a clear trend on this time frame make it difficult to predict the stock's next move in the very short term. It's crucial to monitor the price action closely and wait for a clear breakout or breakdown signal before entering any trades. In conclusion, the news surrounding Tesla is mixed, with contrasting views from analysts regarding the company's future performance. The upcoming robotaxi reveal event in October could be a significant catalyst for the stock, but the deployment timeline remains uncertain. The chart suggests that Tesla is currently consolidating in a narrow range, but recent price action and volume patterns indicate a potential bearish bias. Key price levels to watch include 230, which is acting as resistance and coincides with the 50-day moving average on the daily chart. A break above this level could signal a shift towards bullish momentum, while a break below could trigger further downside. Other important levels to monitor include the recent low of 210 on the daily chart, which could act as support if the current downtrend continues. On the 1-hour chart, 228 could provide a short-term bounce if the stock continues to decline. The 15-minute chart reveals high volatility, making it challenging to predict the stock's next move in the very short term. It's essential to wait for a clear breakout or breakdown signal on the 1-hour or daily chart before entering any trades. Remember, the market is dynamic and unpredictable, so always exercise caution and manage your risk effectively. Stay tuned for future updates as we continue to monitor the news and chart data for Tesla. Thank you for joining us on Explain the Charts, and happy trading!